Hi, I'm Vince Molinari, founder and CEO of FinTech TV, and you're watching Taking Stock.
Two minutes ago, here into the closing bell down here on the trading floor of the New York Stock Exchange. How you doing, Nixon 5? Peter Tuchman, the Einstein of Wall Street, the institution inside the institution, here to kick off for his take in today's tape and much more. Look at these dips and these intraday reversals. The Dow, the NYA, the S&P started up, went down, finishing higher. What'd you see today, Peter?
I think it's really significant because the dips, the pullbacks that we've seen over a number of these days are really shallow. It means there's a bid in the market. It's an old Wall Street term. But it means that if they wanted to sell them, they would, and that's not what they're doing. It's a lot of rotational stuff going on, you know, between the chips and the memory and software and all that kind of stuff. I think the market actually impressively, in a big way. Obviously, the bank earnings were great. Okay, you know, now we're waiting for the second tranche of earnings, but look, the banks really hit on all pistons, which, you know, Goldman Sachs blew it away and a number of things like that, and I think that's going to give the market some support there, because if you think about it, that was during, and I think a lot of, trying to analyze it, a lot of it was maybe, what's the name of that stock that went public? Elon Musk, SpaceX.
Yeah, that little thing.
Right, I mean, think about that and how much that contributed to a lot of the action in Q2.
Yeah.
And so that may have been some of it. But there's an overall broad enthusiasm about the market.
Yeah. Lighter than expected inflation prints yesterday and today, helping boost equities as well. Peter, thank you for kicking things off with us. As always, we'll see you soon. Advocate set to ring the closing bell. More Taking Stock after this. There you have it. It's nice to look up on the big board and see some green on the screen. Your final tale of the tape for this Wednesday, July 15th. July 15th, right? Yeah, there it is. It's already July 15th. The S&P 500 up 0.4, the Dow up 0.3, the New York Stock Exchange Composite Index in positive territory, 0.1%, and the small caps, the Russell 2000, not to be left out of this day's gains, up 0.4%. What else we got? Telecom, discretionary financials, the outperformers in the S&P, your S&P 500 laggards, energy stocks, tech stocks, and utility names. How about the Dow? You don't get to say this very often. Your Dow leaders, Apple, Alphabet, and Amazon. You got 30 Dow stocks. Three of the three strongest names are the Mag 7 names there. Cisco, Travelers, J&J are your Dow laggards. Apple up 4% on the day. SpaceX, by the way, speaking of Mag 7, not quite a Mag 7, but maybe Mag 7 adjacent, hitting a new low of 132 and change intraday earlier on today. Treasury yields taking a dip, catching a bid here on Wall Street. The major airlines, the big banks, and the home builders tend to move inverse there to Treasury yields. On the other side of the trade, memory stocks and quantum stocks getting pretty hard hit, as Peter Tuchman was just mentioning. Let's bring in a guest. I believe for the first time she's on Taking Stock, someone I've wanted to interview for a very long time. Katie Stockton, founder and managing partner at Fairlead Strategies. Welcome to the broadcast. Great to see you here today.
Good to be here on the floor.
What do you make of a cooler than expected CPI print yesterday, cooler than expected wholesale PPI numbers today, and the market's reaction to getting those prints before the opening bell?
Well, the reaction is what I care most about as a technical analyst. It's how does the market absorb the news, not as much the news itself. And we have a little bit of a crack in the armor of the market from a momentum perspective. You're seeing it much more in the NASDAQ 100 than the S&P 500, but we don't have a breakdown. The NASDAQ 100 has been testing its 50-day moving average, and the S&P 500 is holding up decently above, but it's getting what I would call coiled up, and that means we've seen sort of volatility lessen and lessen further, and that usually precedes a big pickup in volatility, and we'll see which way that comes.
As a technical analyst, are there any parts of the technical analysis of the S&P 500, these big picture indexes, you think is worth it for the average investor at home to maybe pay a bit more attention to, or maybe even learn in the world of technicals if they don't follow technicals that closely?
Of course, it's really very easy to get started with it. We like to use moving averages as one. The 20-day moving average can be a great indication of short-term momentum. So when you see a 20-day moving average roll over, that can be indicative of a loss of momentum that's significant enough to rotate your position. And we have indeed seen that from the broader market, from the major indices, and even from the semiconductor sector, which of course has been a source of leadership. So I do think that's the thing to focus on right now for those at home.
I wonder your take on what you've seen out of the big bank earnings. Maybe you don't pay as much attention to the fundamental side, but anything interesting on the technicals for a lot of these big names who, of course, once again, are kicking off earnings season overall. And so far, a lot of interesting movement from investors in reaction to the Goldmans and JPMs of the world the last few days.
Well, I would say it's been somewhat of a muted reaction and not really overwhelmingly positive. I feel that the banks are holding up nicely, but they're not exactly breaking out. We have consolidation phases underway, and that's healthy. Healthy digestion is what I would call it within the context of their longer term uptrends. Their relative performance has improved for financials in general, and that's helped keep a bid to the market when we have tech pulling back.
I wonder if you're surprised with the year-to-date performance. You know the book better than I do. The Stock Trader's Almanac tells us historically this is the weak spot of the 4-year cycle. We're inching closer to the midterm elections, despite what history tells us. Maybe stronger performance year-to-date so far, Katie, than many analysts had been expecting.
Yeah, that's fair to say. That 4-year cycle does appear in many asset classes, and I feel that we're overdue perhaps for an off cycle. That can mean a trading range for the major indices, it could mean a bear market cycle, but we truly don't have indications of a bear cycle at this time. So we want to respect the momentum while it's there and simply position to manage risk through these corrective phases that we think may soon ensue.
All right, shout out to Jeff Hirsch
of course,
and his father Neil Hirsch as well.
Love
for the
Jeff.
Stock Trader's Almanac. Very grateful for your time, Katie Stockton.
Of course.
Really nice to finally meet you and get to interview you today. Please come back on the show anytime.
I sure will.
Nice to
Thank
see
you.
you. Come back. All right, Robbie will grab your mic. We'll bring the camera this way for a few of the top analyst calls that moved the tape this morning here on Wall Street. First up, Oppenheimer downgrading IBM after its worst trading day in history yesterday. They say the software bull thesis will take longer to materialize. Shares down another 2% today. Next up, UBS reiterating SpaceX as buy. Pardon me, fellas. They say the next big milestone is tomorrow, the 16th. That's the expectation for the 13th. Thank you, Nando. Starship test flight around 6:45 p.m. Eastern tomorrow. The stock did dip, as Katie and I were talking about, down to $132 a share. And finally, Morgan Stanley upgrading Kava to overweight. I love the chips at Kava. They say it stands out relative to peers on all the KPIs that matter most, including new store performance. Shares up 5% today, up about 25% year to date. We'll take a look here at shares of BlackRock. Look at all that green on the screen, up 6.6 on the day. One of the best names in the S&P 500. A beat on top and bottom lines. CEO Larry Fink saying private credit terms have stabilized. Shares up on the day and up about 3% on the year coming into today's session. How about MSGS? Because I don't know if you heard, but the New York Knicks are still world champions, up 1.5% today. Morgan Stanley upgrading the stock to overweight, saying it sees a ton of positive catalysts, which of course includes the New York Knicks and the New York Rangers in its portfolio, though there is talk of splitting those two teams. Morgan analysts see a strong risk-reward setup in the near term. The shares are up 56% year to date, Knicks in 5. In this edition of NYC Innovates, Cheddar's very own Chris Castellino checks out New York's first robot store. Chris is the absolute best. Please take a look.
For decades, robots lived in labs, inside factories, and science fiction. But today, New Yorkers are walking in off the street, meeting these humanoid robots face to face. The question is, are consumers ready to buy?
On this episode of NYC Innovates, I check out New York City's first store dedicated to general-purpose robots.
Every household in the next 5 to 10 years will start thinking about having a robot, if not already have one.
Suited up and through hands, and meet the most opinionated humanoid in the city.
My message to the haters, simple. Keep watching, keep talking, and thanks for boosting my views.
Stay with us. Something unusual is happening on Lafayette Street.
I'd love to say hi to your dog.
Theo. His name is Theo.
Tucked between the boutiques and sneaker shops of Soho, a pop-up store has opened. Not for fashion, not for tech gadgets, but for humanoid robots. Welcome to Coit Shop, a physical humanoid retail storefront from asset management firm CraneShares, where 8 companies are showing off what they say is the future of everyday life. Coit is the first US-listed ETF focused exclusively on the humanoid robotics and embodied intelligence sector.
We've gotten very focused on the humanoid robot industry and the mega trend of humanoid robots. So I think it's anticipated to be a billion humanoid robots in the next 20 years on Earth. Society is going to be interacting with robots for the first time. And I think it's good to make it accessible and have a retail presence to do that.
From daily chores to elder care to security, the use cases for humanoid robots in the consumer space are expanding fast. But the price point is still a significant hurdle. Most of these robots on display run between $40,000 and $60,000.
Any new technology, you always have the early adopters, and it's usually at a certain price level, but then as it evolves, it goes more into the masses, and prices will come down. This could be like, where in the early 1900s we saw some automobiles on the road and said, there could be a real future here. I think that's going to happen with humanoid robots today.
Inside the robot demo area, a New York-based company called Katina wasn't just showing off a robot, they were inviting people to become one. This is Katina's motion capture suit. 50 sensors across my hands, arms, legs, and torso. Whatever I do, the robot does. Katina's founder, Antonio Guy, calls this Avatar technology, a general robot control system inspired literally by the movie Avatar.
Our ultimate goal is to have robots as an extension of our body and of our will, so that we can, use robots to do things that was previously unimaginable. Say, for example, you can control a robot 1,000 miles away to save lives, right? Or to use it to do some dangerous tasks. Inside this robot, there is an AI model. It's predicting the next word, predicting the next token, right? And when our pilots are wearing the motion capture suits, it's giving data to the model, and the model predicts the next position, the pose of the pilot. And when you put that all together, it becomes a whole motion. Once we have like a full stack of technology, the idea is that you can live inside a robot, so you can feel what the robot feels. You can see what the robot sees, right? And as we have better and better robots, you're able to use it as your quote-unquote physical digital twin. So you can actually, say you're in Asia and you have a robot in Europe, for example. You just turn on and you can be in Europe through the robot.
Katina is also launching something called the ARC League, or Avatar Robotics Competitions, a robot combat sport where pilots wear motion capture suits and fight in controlled arenas. He describes it as F1 meets UFC meets esports, a proving ground designed to force rapid innovation.
We're thinking we need to use a way to make robots useful, and we need brilliant minds to gather together to make that happen. We need more people to be interested and love robots, so that we can build better robots, and competition will drive that innovation forward.
A robot fight league? Man, I'd run circles around those tin cans with my moves and smack talk alone.
Welcome back to the show. You are watching this Wednesday afternoon edition of Taking Stock live from the trading floor of the one and only New York Stock Exchange. Suniti Pasan joins me now. She is the founder and group CEO of FinStreet Limited. Welcome to the New York Stock Exchange and welcome to the show. Nice to see you.
Thank you. Thank you for having me.
Let's start first and foremost with an introduction to FinStreet for viewers who may be unfamiliar. What is it all about and what are the main problems that you are solving?
So, as you know, JD, the economic activity and capital formation is going very much in the private sector, and there is no systematic infrastructure for private sector, which is for investors to access capital or issuers to raise capital on private sector on a large scale. And FinStreet is making that market, which is a regulated market infrastructure for private market assets.
What would you say are among the key ways that FinStreet is fundamentally different from other, let's say, tokenization platforms?
So I think tokenization platforms are focused a lot on blockchain, and tokenization in terms of representing an asset digitally. Whereas FinStreet, on the other hand, is about creating a market which is regulated. And therefore, it's about having investor protection, market integrity, and fair and orderly markets. But at the same time, our main moat is that, one, we are providing a regulated market infrastructure, of course with the tokenization technology, but also that we have the access to very high quality assets, as well as deep pools of capital and distribution with FinStreet.
Could you give us an example of the type of product that we might see up on FinStreet?
So, for example, there's a private credit fund product, and if you were a sophisticated investor, you would have to go through certain checks to actually get that product, get through to a fund manager to accept you, to manage your capital, have a high minimum threshold of even getting in, which is that maybe they need a 1 million minimum for you to get in that fund, or that there will be certain lockups, you can't exit that fund, or that there are all sorts of bilateral negotiations that happen. But with FinStreet, what we could do is very easily, already speaking to a lot of managers, to allow for tokenized funds, which is digital representation of fund interests, to be listed on FinStreet, which will allow a lot more lower minimums and access to great asset managers and very high yields as a great quality product on FinStreet. So you see that it's a very bespoke market infrastructure that we've created for this market.
That's amazing. Well, finally, before I let you go, I know you're based out of the UAE. Why build FinStreet from the UAE, and what comes next?
So UAE is a very natural home for us. It's a solid foundation for us. UAE has large and deep pools of capital. It has great access to institutional assets, which are not only from the UAE but across the world, because UAE owns a lot of assets, but also a government which is very interested to build the next generation of financial markets. So it was a natural home for us to set up an innovative market infrastructure, which is not the legacy market infrastructure as there exists in public markets today. But more importantly, we are now expanding, and we are either acquiring licenses, or we are getting more licenses in Europe, in the US, and other places. So that's why also I'm here in New York today.
Congratulations on the expansion. Thanks a lot for taking the time to talk with us today. Really nice to see you.
Thank you so much.
Suniti Pasan, founder and group CEO of FinStreet Limited. Don't go anywhere. A lot more Taking Stock coming up live from the trading floor of the big board right after this. Welcome back to the show. Time now for a few headlines in the world of fintech, crypto, and artificial intelligence you need for your Wednesday afternoon. At this hour, the crypto majors essentially flat. Ethereum up almost 2%. Bitcoin right around 65,000. Next up, Stripe and private equity firm Ardent offering more than $53 billion to acquire PayPal. It's a deal that would combine two of the world's largest online payments platforms. Finally, President Donald Trump expected to meet with senators on Thursday. That's tomorrow, as lawmakers are racing to finalize the Clarity Act. Yes, at long last, a bit of progress. Negotiations now focused on ethics rules tied to his family's crypto business interests. Earlier today, FinTech TV's very own lead anchor, Remy Blair, sat down with Georgie Dickens of Kajetan Group. They discussed which elements of human leadership simply cannot be replaced by artificial intelligence. Take a look.
Well, joining us live here at the New York Stock Exchange to break all of this down is Georgie Dickens, co-founder and managing director of Kajetan Group. Georgie, great to have you here. Thank you so much for joining me.
Thank you. It's nice to see you.
Well, when it comes to artificial intelligence, we know that the target audience is human beings. So what is one leadership trait that this technology can't actually address?
Yeah, and I'm going to go there, but a book I'm reading at the moment is from Ryan Wislansky, the CEO of LinkedIn. And I think there's something really, like a really powerful line he shares in the book, which is, in today's world, it's not human or AI, it's human with AI. And he speaks, we all have a role within our organizations, and it's about breaking down that role into the skills, into the tasks that come under that role, and then looking at what can you automate. And they fall into three buckets. So we have the first bucket, which is tasks that AI can do alone. The second bucket is AI with human. And the third bucket, which you speak to, is what are humans uniquely positioned to do? And in my work with global leaders, there is a big agenda item is looking at AI. In fact, a leader I was working with yesterday, he said they've been measuring everyone's AI utilization since 2024, and 95% of their workforce are using it 90% of working days. So there's a heavy focus on it. And I think it's working out where you can leverage the efficiencies. And there are core skills that humans are uniquely positioned to do. If we look at any great leader across any sector, they are great storytellers. They have the ability, where we speak from as well, we connect to. When they tell that vision, that story, they have a way that they speak that inspires, that motivates, that captivates people. So I think being at communication is critical. I think people today want to hear from leaders. They want to see leaders. They want to know that you're human. When we think about trust, great leaders typically have a trusted or are trusted by their organization. And trust comes from words. It comes from actions. It comes from doing what you say, saying what we'll do. And trust is earned over time. So I think communication's still a key skill. And even for leaders, if they're the more introverted, again, it's about how you get good at making sure that you can speak about what your organization does in a really compelling way.
Yeah, and Georgie, you work with C-suite executives and advise them as well. So what would you say is the one skill that leaders need right now to survive?
Well, there's many. I think one of the key ones is adaptability. The world is moving so fast. How do you stay relevant when everything is moving so fast? So I think it's being really intentional about what news sources you're subscribing to, because you want to stay relevant. But again, you could be reading the news 24/7. So adaptability, the ability to be flexible and to flex. I think the second piece is really making sure as leaders, your leadership team, who do you surround yourself with? And it's about having the Avengers. And if we think of the Avengers, all superheroes, individually brilliant, collectively stronger. And so great leaders, they surround themselves with great people, they empower them, and they get out of the way. And then the third piece, and I know you asked me one, but the third piece is, and I've seen this with a leader recently spoke to the summer interns they're bringing in, and they give their summer interns real responsibility, very close proximity to the process, because they don't want to become a generation organization. And the younger generation coming in, they're native to technology. So it's recognizing that you can learn from everyone, not just your peer group, but anyone within the organization, and really being intentional around that.
Yeah, and Georgie, as you mentioned, it is summer internship season right now here in the US. So it goes without saying that we are living longer and we're working with so many different generations nowadays. So what do you think is key as we move forward for everyone to be able to communicate?
I think, first of all, having a high learning agility, recognizing that people have different communication preferences. I think we can often judge someone's communication by how we speak. So it's that openness and that empathy, putting yourself into the shoes of others, and the ability to flex. It's about being authentic with more skill, knowing the situation, the audience, being authentic, but what are the levers you need to dial up or dial down to drive the outcome you're looking for?
Well, Georgie, always great having you on the show. Thank you so much for joining me today, and thank you so much for sharing your insights.
Thank you. It's a pleasure.
Appreciate it. Thank you.
Welcome back to the show. Time now for a few business of sports headlines, appropriately so. First up, venture capitalist and OpenAI backer Vinod Khosla, along with his family just a few days ago, buying the Seattle Seahawks. Price tag, $9.6 billion. They bought it from the estate of Paul Allen, pending NFL approval. Next up, Live Golf reportedly funding the rest of its 2026 season through loans from Saudi Arabia's Public Investment Fund. The move comes as the league searches for outside investors to better secure financing beyond this year. Finally, Germany's Bundesliga signing a 5-year, $100 million U.S. media rights deal with USA Network and Fandango, moving its English language broadcast from ESPN beginning this season. And in the 65th minute, England holding on to a 1-0 lead over Argentina. Money 2020's very own Scarlett Sieber is now back with a whole new edition of Hindsight 2020. Of course, that's where she breaks down key dates in financial history. Take a look.
I'm Scarlett Sieber from Money 2020, and this is Hindsight 2020. Let's rewind the clock back to July 15th, 2013. U.S. regulators begin issuing formal guidance on how digital currency should be treated under financial laws. For the first time, crypto isn't just experiential, it's acknowledged within a regulatory framework. This moment doesn't shut innovation down, it clarifies the rules around it. That matters more than it sounds, because financial systems don't run on innovation alone. They run on legitimacy. Without regulatory clarity, we have a lot of issues. Institutions hesitate, capital stays cautious, adoption stays limited. When you have it, the frameworks emerge, compliance becomes possible, scale becomes realistic. If we fast forward to today's conversations around digital assets, stablecoins, and tokenization, the same tension, it still exists. The innovation moves first, regulation follows. But once regulation arrives, it determines who can actually participate. July 2013 wasn't about limiting crypto, it was about defining the conditions under which it could grow. That is your Hindsight 2020, because in finance, legitimacy isn't just about what's possible, it's about what's permitted. And with that, back over to you.
Tomorrow morning on Wall Street, we'll get the latest quarterly results from UNH, Taiwan Semi, GE, Aerospace, and U.S. Bancorp. This time tomorrow after the bell, Netflix. Thanks for watching today's edition of Taking Stock. Have a great Wednesday night. We'll see you again tomorrow from the big board.